Hello and a very warm welcome to Money Control. I am Shweta Punj. The year 2023 has been a crucial one for the Indian IT sector. A year of reckoning, a year of rethinking, and a year when possibly a lot of IT companies press the reset button. We've seen mass exits from big IT majors. We've seen a slowdown. We've seen tens and thousands of employees being laid off from the Indian startup sector. To make sense of the Indian IT story, where it's headed, how do the crucial legislations that have been passed this year, which includes the data protection law, the new telecom law, how do they impact the industry? What's the outlook for 2024? We have with us Dr. Srivastava, co-founder of the Indian Angel Network, of TIE, co-founder of NASSCOM, and of the Indian Venture Capitalist Association. Thank you very much, Dr. Saurabh Srivastava. It's been a pleasure to have you with us on Money Control. I have to begin by asking you, if you were to look back at 2023, in my introduction, I said that it has been a momentous year for the Indian IT sector.
Yes.
While we are seeing a slowdown in the IT sector, we've seen startups resorting to layoffs and so on and so forth. Plus, we've seen crucial legislations. How would you, what are the key takeaways for you from this year for the sector?
Yeah. So 23 has been a very, very momentous year. Different reasons. The slowdown you talked about on the IT side, that has a lot to do with what's happening geopolitically. So the main markets of the IT sector, the IT service sector, is really are the US and Western Europe.
Right.
Those are the ones, as we both know, are majorly impacted. And as a result, clearly our IT companies are seeing a level of slowdown. We're not alone. You would have seen Accenture's results.
Yes.
They have the same problem.
Right.
So there is a slowdown. And so certainly, if you look at 24, I think we're cautious about that too. 23, yes, there's been a slowdown. 24, we're cautious. Hopefully by 25, we should start moving again. I think the geopolitical scenario should resolve itself in some form or substance.
Sure.
And the second thing on IT services in particular is the whole entry of AI.
Right.
So most companies have done work, they're prepared for it, they're building that into their offerings. But all customers are not yet ready. There's a lot of talk, a lot of buzz,
Right.
but all customers are not yet
Ready.
fully ready.
You're talking about Indian customers or
No, global. Because for IT services from here, 80-90% is global. So global customers are not yet fully ready. Even Accenture was very quick off the blocks on AI.
Right.
Getting ready with that angle. But you saw they had results that, were not great.
Right.
So I think in general, we will see a bit of this slowdown. And there's a technology shift that's happening. The service providers are getting ready faster, but they're ahead of the curve as far as customers are concerned. So they'll have to catch up. And then the geopolitical situation is squeezing budgets. People are not investing. There's general challenges around.
Right. So,
but we've seen this before. And generally when these things happen, at least going back to 2000, we've had more than one phase. 2008 was another, 2000 was one. So generally I find Indian IT services company, they pick up faster than their global counterparts. In general. They have more reserves, by and large, leaving aside one or two global companies. Most of our companies are very healthy on their balance sheets. So they can handle some difficult times.
So, when you say that you're cautious about 2024 as well, would you say that we have already hit the lowest point and from here we'll start edging back up, or we are yet to hit another low?
like the stock market people tell you, you can never time the market.
Right.
So I would also tell you, it's hard to say, have we hit the bottom, or would it slow down a bit more or not?
Sure.
But generally, when I look at 25, I think that will be a much better year.
Okay.
So between now and 24, we'll all have to kind of tighten our belts.
So aggressive cost cutting is what we are seeing across the IT sector and startups.
I would say cost management.
Okay.
Because in general, the Indian IT service providers are very efficient users of capital. They're very mindful of costs. Less so than their European counterparts, for sure. And so cost cutting only means, well, you play with increments. You're not. You're not doing mass scale layoffs and all the rest.
Right.
I mean, Indian IT service companies don't actually do that.
Okay.
One of the reasons, actually, for their success is that whenever there's a slowdown, when it ends, they are actually ready to move into the upside. They don't have to start getting ready to take advantage of the winds that become better.
Also, would you reckon that this is the point of reinvention for the Indian IT sector too? What are the skills that, according to you, should they be focusing on? What are the kind of services? Is this the time for them to maybe reflect and press the reset button in what they are offering to the world?
So reset in reimagining, redesigning. IT service companies in India keep doing it fairly constantly. It's been happening. For example, the whole move to digital. That came, and at that time, IT service companies actually, to some extent, were a little short of the crease. They hadn't done as much as they could have, but they caught up very quickly. And again, saw great growth coming in. The AI piece, again, at least, it looks as it has come suddenly, because for the general public, it's ChatGPT.
Sure.
But AI has been around for a long time.
Right.
And I think if you look at IT service companies, one measure of what measures they're taking is, what is the revenue per employee?
Okay.
Is it, and for a long time, it's become less and less linear.
Okay.
And that means companies are building platforms, they're building tools, they're building products. So a lot of work has been going on. Without question, in the next year or two, there'll be even more serious changes. A lot of reskilling has been happening.
Okay.
Ever since the digital time happened. That's when NASSCOM itself set up this whole program of Future Skills program.
Right.
The whole industry came together and said, look, we all realize that if we don't reskill our employees, then half of them could become redundant.
Absolutely.
And you don't want that.
So that's happening.
Yeah. And most countries are not able to come together like this as an industry and solve the problem.
Right.
They each solve their own company problems. That's our big edge in the Indian IT industry, because with NASSCOM playing a key role,
right,
we are able to get industry level problem. This is an industry level problem.
Sure.
It's not a specific company. All companies have this challenge.
Right.
So we do get together trying to resolve this. So I am actually very hopeful that we are not alone in terms of any challenges we have.
Okay. When you talk about employment creation, now IT sector has been a big employment and a wealth generator for a lot of young Indians. But we see that when we see that sector slowing down, it has larger ramifications. What are the new kind of jobs that you see will come from this sector in 2024, 2025? Like, what would be your advice to youngsters out there, who are looking at entering the job market?
Yeah. So I think one should take a wider view of this. It wasn't long ago when, around the time when we were, when I was co-founding NASSCOM,
right,
government believed that computers create unemployment.
Wow.
There's always this belief that there's more tech.
Yeah. And that's the worry
Jobs
with
will
AI
lose.
too. That's the whole debate around
It's
AI
been
too.
always the case through
Right.
history.
Right.
But if you look at history, it tells you that it's a fear that's never been realized. Whenever you have more technology, actually in the end, you have many more jobs. Different jobs though.
Sure. Okay.
You had that when you had the Industrial Revolution.
Right. Right.
Everybody thought, oh boy, all the textile workers are dead. But if you didn't have the Industrial Revolution, you wouldn't have had the kind of growth we had in economies.
Right. Right.
So if you look at IT, it's because of what happened in the Indian IT service industry. Both the quantity and quality of talent that we created, that the government was able to capitalize on those.
Sure.
And had the vision to create UPI, UID, all these digital public goods.
Right.
Now they have been very empowering and they've created zillions of jobs.
Yes.
If you look at just that piece
Right.
alone. So now you have startups. And you have startups because people have seen what it's like. They understand the global requirements.
Right.
They have the tech. So they are now, and they have capital available. So they're moving out and creating more jobs. So it may be that the IT service industry will keep hiring for sure, but how much it hires, that rate may go down.
Okay.
Because as the revenue per employee goes up,
right. As more efficiency comes in.
there's more efficiency comes in. That will happen, right? But there's need for all those people. In all these tech startups, we have 100,000 startups. Every startup
right.
is tech driven.
Yes.
So they need tech people. So is there a problem that tech people will have with jobs? I don't see it in the near future.
Okay.
If we take a wider view, customers need them,
right.
government bodies need them, banks need them, insurance.
So you're saying that more than big tech, it's the Indian startups that will generate more jobs?
I don't know about more, but they'll both create jobs.
Okay.
And in the end, the startup ecosystem should probably create more jobs than just one IT service sector. You're starting at slightly disproportionate levels. This is a $250 billion industry, so
right.
it's
of
big
course.
now.
Yeah.
But this is coming up very quickly.
Right. So when you look at, what are the sectors or what are the kind of skills that you would say would define the future of jobs in India and meet the needs of the world?
Yeah. In terms of evolution, this always happens. That in the beginning, the most important person was the guy who wrote code.
Right. Yes.
Because code was very difficult to write.
Right.
You had to write it in what they used to call machine language. But as you go along, it's easier and easier to write.
Okay.
And with AI and whatever, a lot of code can be done
automatically,
right? But so you move to the next level and the next level and next level. So in terms of reskilling, you're going to see a continuum where to be very successful in these applications and meeting a business requirement, you don't necessarily need to be a techie.
Okay.
You need to understand technology. You need to understand business requirements. You need to know how to translate them into what can be done. Because the building blocks will become easier. So
ability to think, I would say, more laterally? Ability to connect the dots rather than a very linear focus on just...
You will need a lot of people with a very linear tunnel focus. You'll need a lot of people with a much broader focus.
Right.
Who understand where the world's going, what are the business requirements, what do I need to succeed in the organization, what digital public goods should I build. You need a lot of that thinking. And those don't have to be IT people.
Got it, sure.
They don't have to be IT people.
So they could be people
because they don't have to write code.
Got it. So arts, humanities.
Yes.
These are the...
Any of those, any of those. And more IT companies actually have people who are from disciplines other than IT. So IT actually will become, how should I put it, ubiquitous in a sense. AI is a big deal today,
Right.
But it will be ubiquitous. I mean, it'll be, building blocks will be all over the place. I build an application and I want to integrate AI into it. I won't have to write AI code. So it's changing, and when these changes happen, there will be people who need some reskilling. Some people will just start with a new skill. There'll be demand for skills that there wasn't there before. This happens all the time. It's happened before. It'll happen more, but this time around, it will suck in people who are not necessarily techies.
Interesting.
So overall, I see many more jobs being created, not necessarily the same jobs, that we used to have.
Interesting. Dr. Srivastava, I want to talk to you about the bellwethers, right, of the Indian startup system or of the Indian IT industry. We've seen high-profile exits in Infosys, at Wipro. Then, we've seen big shakeups in the startup universe, whether it's Byju's, whether it's massive layoffs in Paytm. How do you view these developments? What is going on at Infosys? What is going on at Wipro? Why are we seeing such high-profile exits?
So, my answer may surprise you. I'm quite happy with all this because this means that we are growing up.
Okay.
All the things you talked about,
right,
we all know they are commonplace in America. High-profile execs moving around. All of this happens all the time, right? Mass-scale layoffs, this is all common there.
That's right, yes.
If it begins to happen here, this means that we are actually getting somewhere. We are maturing. We are growing.
In our thinking, in our way of doing
as an industry. Because so when high-profile people just quit and leave, they can do it because they know there are 10 other jobs waiting for them. Right? If people don't quit, it's often because there's no jobs. So one good signal is somebody who's a CFO, CEO, CXO quits. That means they are confident there are other jobs around. So it means we have a vibrant ecosystem. There are a lot of companies. They have a lot of choices, right? It's not that people are always happy with the company they're in. They can have differences. But if there are not enough options, they will not quit. So to my mind, quitting happens. It doesn't always happen because they think the company is going south. It's because they themselves, maybe they don't get along with their boss, they don't agree with the company's directions, or...
But when you see a string of top leadership leave a big company that has put India on the world map, right? Questions are raised. Like one thing, like as somebody who, as someone who's an observer of the Indian economy, I'm also wondering, I'm like, what's going on with this company? Why aren't they able to retain their top talent?
So I don't want to comment on specific companies. But if a lot of the top talent leaves one particular company, right, then clearly it's a management issue. And the company has to relook and say, why are these people leaving? Okay, because it's not asking them to leave. But people leaving at senior levels is very common when an industry is mature. Because people can get better deals, better salaries, bigger roles. They may not get along with a particular boss, whatever. There are all kinds of reasons. And if your ecosystem is not doing well, people don't quit because they have nowhere to go.
So
to me, it's a positive sign.
That's one
that doesn't mean if half of the top management of a company leaves, it's a good sign. What I mean is, senior people moving from here to there, I don't actually worry about it. But
so it is time for Infosys, for instance, to reflect perhaps that what is...
I haven't followed that, so I don't want to make a comment on Infosys. But what I would say that in general, I mean, this is it's not just Infosys. This is happening at all the major companies. That I'm aware of.
That's right, yes.
All the major companies. And I think I would only say, if for any company, if it's happening all the time, then you might want to take a look and saying, look, what is it that's not working? If you look at startups, the big startups are unicorns. this is much more frequent there.
That's right.
Much more frequent.
So I want to talk to you about Byju's, the poster boy of Indian entrepreneurship. What a great story that India also sold to the world, literally. And now what we see happening with Byju's, where do you think that they went wrong?
So, again, let me not specifically talk on Byju's itself, because I have not done a study of Byju's.
Sure.
So it may be unfair to the company and in general. But I would say, well, companies get into that situation when they raise a lot of money at very high valuations.
Right.
And then go south. There are a lot of things that happen. So one is that people who raise the money, or the founders, have, maybe they never ran a company before. Maybe they never ran a profit center before. So they don't know how to build or run an organization. It's not uncommon amongst startup founders. Now, some people can scale. Some people can't. Some people build a great team. So if I'm a founder, my strength may be sales and marketing. But I know to make the company work, I need a good tech leader, I need a good finance guy. So I need to bring them on board as co-founders.
Right, right.
So companies, if they don't do that, then they raise a lot of capital, then it's very high risk, because they'll spend unwisely.
And not work on the product so much.
They get too, that's one of the problems of easy money that we had in 21, 38 billion.
Yes.
Right, even 22, it's 25 billion.
Right.
Because before that, if you see, we were generally getting in 10, 12, 13 billion.
Right.
This just went up, down.
Right.
So I think a lot of companies, to some extent, I think, were not disciplined. They were all about raising more money. And in some cases, there was also pressure from the VCs to go for top line growth. So I think they just went for top line growth at whatever cost. Didn't worry about the quality of it, but the quantity of it. Didn't look at their costs. And there was this view that we'll always be able to raise more money.
Right.
So
the focus shifted from maybe profitability to just raising money.
I think a lot of people confused investor money with customer money.
Very important.
The whole thing when you're building a business,
Yeah.
the most important thing is customer money.
Right.
I mean, for me, business means you have a product or service which customers like, are willing to pay for, and you can make a profit
Right.
at what they are willing to pay you. That's a business. Now, if the more I sell, the more I lose, that's not a sustainable business. So the day of reckoning will come.
Right. Right.
You may keep going up to a certain time, but it'll come. So to my mind, easy money spoiled a lot of our founders. Many of the founders, I think, were also unethical in what they did with the money, how they used it. There are enough stories around.
Absolutely.
I don't have to talk to you about how they
Sure.
personally enriched themselves
Yeah.
while their companies went down
Right.
the tube.
Right.
And there were lots of people in between who may not have been, at a personal level, unethical, but they used the money very unwisely. Because it was free and easy, they thought they would get it.
Yeah.
Their business models were flawed. So unit economics was not something they looked at.
Right.
Okay. So I think there was a variety of factors that did this. So I wouldn't, while I don't want to focus on
Sure.
one company, the fact is there's a number of companies which have to different, I mean, Byju's is one which is very visible because they raise a lot of money, very high
It was
valuation.
a meteoric rise, and then
and suddenly there's a feeling that there's a lot of fluff in there.
Yes.
Right? So it's a very, it's not a good thing to happen, because I know a lot of this happens in the US as well. Founders are unethical, sometimes poor business models, blow a lot of money. I mean, you have enough stories in the US.
Right.
But they're a mature system. They can deal with it. In India, startup revolution is just happening.
Correct.
And it would be terrible if global investors sour on India because they find Indian founders not behaving well in terms of what is expected, in terms of ethics, in terms of focus, whatever. So we've had our share of companies that have, I think, let investors down.
So this year we've seen funding sort of come down from the previous years, and do you see that continuing, or do you think that what is it that the investors are, why do you think has there been a slowdown in funding, and when do you see them warming up to India again?
So one, in terms of slowdown, as I said, we had a certain level of funding coming in.
Yeah.
It peaked in 21, came down 22. And this year, the calendar year, I hear it's down by 70% or something. Maybe in the financial year, we may still end up with a similar level, like before, 10, 12, whatever. The fact is, it should be much higher. I'll tell you why. There is a lot of dry powder sitting with VCs. A lot of money has been raised. There isn't a shortage of capital.
Okay.
Two, unlike many parts of the world, where the economy is not doing well, our economy is doing quite well.
Right.
So, although the global slowdown has happened everywhere,
but we've shown results.
But there's no reason why we must mirror that.
Sure.
Because our economy is growing much faster. So we should actually see a growth, even if other places are slowing down.
Okay.
Thirdly, they all have a mature ecosystem, a startup ecosystem.
Right.
We don't. Our ecosystem is just revving up. And therefore, there should be a lot more opportunities in India than in most other parts of the world. So there's no reason that our funding pattern should mirror what's happening globally. We should be on a much sharper curve.
Okay.
Yeah. And there is capital available. So I think 2 or 3 things have happened. One, because the valuations went through the roof, founders spent unwisely, sometimes unethically, and the big investors who would come in and bail you out, like SoftBank and all the others, those balloons burst. So suddenly the investors felt, hey, if I put in the money, who's going to come and put in the next round? So they stepped back. And they started to suddenly also want to look at the bottom line. So there was a pulling back for that reason. There was a pulling back because of, I think, some of the founders that were downright unethical. So many investors got burnt on a number of their investments. And so they stepped back and said, okay, let's hold and do that. So all of these stories that are around, and again, I don't want to take names because we all know who they are. And some of them are actually writing books and, and sort of gaining fame around what they did. But the fact is, they hurt the startup ecosystem. So a lot of investors got more cautious in doing that. And because globally the big investors pulled back, the people investing in the middle rounds in India also said, let's take a pause. So 2 things happened. Thirdly, I think in terms of the dry powder that is sitting, that is huge.
Okay.
So for us to come back into investment,
Right.
shouldn't take very long. So at the very seed stage, let's say where the angel networks invest, or
Right.
let's say the Iron Angel Group invests,
Right.
there's been no change there.
Okay.
That's been very solid. It has seen some dip, but not as much. Okay. The other thing also that's happened is founders' expectations and valuations got very bloated.
Okay.
And in the new scenario, no VCs want to pay that kind of valuation.
So the founders will also come back to more realistic
But it always takes time. There's always a lag. When this happens, the VCs first decide that these valuations are too high. The founders take a little while to get accustomed to the fact that, they need to have more sensible valuations. So the valuations did go through the roof. So to some extent, I would say the funding, quote unquote, winter that's talked about is actually a very good thing for us, because it sifts out the people who are not good for the startup industry. The founders with poor ethics, the founders who are, how should I put it, careless with how they use investor money.
Right.
The founders whose companies are in trouble. Investors are crying. But those founders are suddenly rich, they're investing in other startups. So all of this stuff happens, and it sorts itself out. And there's a slowdown, then everybody has to play the game much better. It gets tighter. People get more disciplined.
Standards get
Valuations are right. Standards get done. And so for our ecosystem, it's good that this happened. The correction is happening. The good thing is that there's no dearth of dry powder. So the once this alignment happens, I think this will accelerate, because unlike many other countries, here you have so many areas that have not even been explored. Space tech has just gotten going.
Right.
It's not an area most countries have for investment. We had no startups in defense. Now the government's created IDEX and they're encouraging startups to get into defense. In many of our areas, on clean tech,
Think
they have huge needs.
Right.
On agriculture, you name it. Apart from the usual thing that everybody does, software products, SaaS, deep tech, that's all there. It's not going away.
Right.
But we have opportunities on scale in India that most countries do not have. European countries don't have that scale.
Right.
Yes, you have that kind of scale maybe some places in Africa, but they neither have the tech nor the entrepreneurs nor the capital.
Right.
So we have a lot of scale.
So India is uniquely poised.
Very uniquely poised. Then if you look at digital public goods, now they enable so many startups. I mean, look at payments. If you didn't have UID or UPI,
absolutely,
where would all those companies be?
Right.
It creates a whole ecosystem. No country has that. So, to my mind, the global slowdown on funding really should not impact India in the way it has. And it will bounce up once some of this correction has happened on valuations, on founders who have been careless with money or unethical, being weeded out, the overall ethos, culture changing. I think it's happening. So I am very happy that you had a slowdown. We all got real.
Right.
Yeah, we all understood at the end of the day there's gravity.
Right.
We're not all in the clouds. But I can't think of any country that's better positioned to really accelerate the startup movement more than India is.
Okay. I want to talk about some of the latest regulations that have come into place, right? Like we've got the data protection law, we've got the new telecom law, and there's a digital competition law that's in the works, and you're part of that committee. So just to get a sense, on all these legislations, what do they do for the Indian startup ecosystem and the message that's going out to the world, to the big tech specifically who are operating in India. Today we are speaking, this morning there's news coming in from the US that United States is banning the sale of Apple Watches with medical technology in it because of a patent infringement allegation against them. So I just want to get a sense from you on, how do you see these regulations panning out for the industry as a whole?
Yeah. So one is, these regulations happen in all developed countries.
Right.
And they happen for all areas. And overall regulations are good because you do need to have some structure. You need to have guardrails, and all companies operating need to understand what is the environment in which they operate. We have been behind on some of them. So if you look at data protection, we had a draft of an old law, which was actually a very bad law. And I think the government has done a brilliant job of redoing it from scratch. So the current law that we have now, in general, we are quite happy with it. There's always things that we can improve.
Sure.
But we're very happy with it because the older one drew much more from Europe. And that's not good for us.
Okay.
Because, see, in Europe, a lot of the development, the work, the startups, a lot of that has happened. It's not anymore the center of innovation.
Sure, yes.
So the centers of innovation are always America, but many other places in the world. Israel is one of them, many others.
Right.
So when you are not a center of innovation, you're more focused on taxing innovation than promoting innovation.
Fair enough.
Now, we are in a very different position. We want to be creators of innovation.
Right.
We want to go global with what we're doing.
Right.
So, for us, it's more important to make sure that we don't have regulations which kill innovation within India, our companies. And that's why borrowing from Europe is the wrong text. And so we did very well. I mean, the government did very well to relook at it and have the ability, very bold in fact, to say, well, this doesn't work, let me just do it afresh. So we are quite happy with the data protection law. It's largely addressed most of industry's concerns.
Okay.
So I think we're okay with that. On the telecom side, we had some concerns with inclusion of OTT players and others, whatever.
So the current language is a bit ambiguous on that, right?
I think by and large they're out.
Okay.
To our understanding, they're out. I mean, this still has to play out a bit. All the details are not in there, and we'll have to watch for that.
Sure.
But it looks like that may not be happening.
Okay.
If you look at digital competition law, I mean, and we're not the only countries that are looking at that. There's the US, European Union, UK, Australia, many other countries are looking at that. So the idea there is that in the digital world, you can become dominant very quickly. So it may have taken General Motors a few decades to get dominant, but it didn't take Google quite that long.
Right. Yes.
And if you can get dominant very quickly, then you can create damage before anybody can fix it. So the old rules of antitrust and whatever, they take time.
Right.
So first you have to determine that you did some damage, that has to be assessed. And the worry is that by the time you get it all done, the damage is already done. Competition is already finished. It's too late. So the idea of this law is to say, can you establish principles to say, look, if you violate these principles, you are guilty even before I need to prove that you've done some damage.
Okay.
So these are called ex ante laws rather than ex post, ex ante.
Right.
Now, when you do this, you have to be very careful because what you don't want to do is kill innovation.
Right.
You're trying to prevent bad behavior that kills competition.
Right.
Okay. So your objective is still the same as it was with antitrust.
Yes.
But because you're doing it ex ante before the fact, you need to be very careful. And again, there are all kinds of models. The EU model, I don't think is the right one for us.
Okay.
Because again, because EU is seeing itself less as a creator of lots of innovation, but more at the receiving end, particularly of American innovation, where they feel, they're being monopolistic in how they're operating. It's not just that, even Japan recently I just heard is taking a view on Google and others.
Yeah.
So they all have that. Now, if you look at us, yes, all the same things also apply here. But unlike most other countries, we are still confident that we can create those big winners out of India.
Okay.
So there's no company in Europe trying to compete with Amazon, not in Japan. I'm leaving out China, it's a closed market.
Yeah.
Right? But we had Flipkart, we had Snapdeal.
Yeah.
Now Tata's want to do it.
Right.
Reliance Jio is doing it.
Right.
The government has ONDC.
The government has ONDC, yes.
So we're not like the other countries.
So then our digital competition law, what are the...
So when we look at digital competition law, it's harder for us. It's much easier for Europeans.
Sure.
Because they're not looking to create all that. Nobody else is. We are.
We are.
So we need to make sure that when we look at this law, it does protect competition from the challenges that come up with a player being dominant and not behaving correctly.
Right.
But we also need to make sure that others who are playing in that range feel they can still innovate and grow and win. So you don't want to...
Got it. So will it be more, are you looking at giving some sort of, for the lack of a better word, some sort of protection to domestic players? Is that something that's going to be under consideration?
Yeah. See, this is still a draft thing which is still being discussed. So unfortunately, I can't talk too much about what will or will not happen there. But what I'm saying is that we have a more complex environment in which to look at the digital competition law. It's not only foreign companies.
Got it.
You can have local companies that can also be indulging in bad behavior if they are in a position of control. So we have to look at all of it. But like I said, we have to balance it out. It's easier in countries that are not so focused on promoting innovation within their own countries.
Sure.
By and large. In India...
So we're probably going to take the South Asia model, like something like what Japan is doing. They're holding Google accountable.
No, those things are separate. Those have happened here also. I mean, the Competition Commission of India has already passed some orders on Google.
Right.
So those kind of things are happening anyway. That's not different. But on the ex-ante part, we are looking and we have looked at what other countries are trying to do. So we have looked at what the US is trying to do, the UK, which actually surprisingly is not doing what the EU is doing, is doing something different. And you have Japan, you have Australia, you have many other models. And it's for us to take a look at it and saying what works best. I mean, the goal is quite straightforward. We want to do this largely to promote innovation. I mean, you want to prevent...
so what stage are we at right now?
It's in a draft stage, right?
So by 2024, do we see it getting...
I would imagine. So, I mean,
Okay.
I'm not the government, so I can't give you that answer.
Sure.
I won't be on the committee. But yeah, it's a draft stage, so I would imagine next year we should see some of that coming out.
Very quickly, my last question on your outlook for 2024. How crucial are general elections when it comes to the investment climate of the country and when it comes to startups going out there and raising funds? And what are the sectors that you're betting on? So 3 questions packed in one.
No, so firstly, I think I would say overall the environment has been good. It's slow down and whatever that you're expecting. But let me just relate it just to the iron activity itself. Now, in iron, you have three things. You have the angel group, you have the first one, and the second one that we're just done a first close on.
Right.
So the angel group keeps doing fine.
Sure.
We haven't seen any real change. The demand, the kind of companies only get better, the quality of founders gets better. And in general, people get returns of 25, 26, 20, 30%. In that range, hasn't changed. If you look at Fund 1, which we finished investing, is doing great. We've done some exits with great results. So again, it's a fund which we think would return, 3-4 times the capital. Is doing fine. Alpha fund, which we're doing right now,
Right.
we just did a first close at a bigger number than 355 crores, which is larger than the first fund that we had done. Later this month, in January, we'll do the second close. It'll take us to half our target of 1,000 crores. Already 3 companies are already lined up to invest. So the pace has not slowed down. Okay. My sense is that going forward, we will see at least in this area that this funding winter or whatever you call, that has kind of hit its rock bottom.
Okay.
It will move up. Market corrections have happened on valuations to a large extent. Activity has not come down. And a lot of new sectors are doing very well. So the bets we took on clean tech, for example, on space, these are all new areas,
Right.
are doing phenomenally well. They're doing as well as our bets on SaaS,
Okay.
for example. You would imagine that they won't.
Sure.
And what I'm finding is that the quality of founders, the quality of ideas, the ambitions that they come with,
Right.
are really at a very different level than even 2, 3, 4 years ago. So my own feeling is, from a startup viewpoint, this would do exceedingly well.
Okay.
From a government viewpoint, it remains an area of great focus. That's one of the reasons the opening up of space, defense, all of these are happening.
Right.
So I think so long as we make sure that both foreign and domestic capital are welcome and encouraged, we will not see this revolution slow down, because there's no dearth of founders today. Healthcare has become huge. 7 years ago, there were no startups in biotech. There's about 6,000
Okay.
today. And we funded so many of them. And they're phenomenal. They're absolutely world class in terms of what they're trying to do. So I think our entrepreneurs are coming into their own.
Okay.
And we went through this crisis of self-confidence in the IT service industry for a long time. Domestic customers didn't think we were good enough. So we had to sell overseas.
Right.
Now we're out competing the best companies globally. Again, on startups,
Okay.
I think both our domestic customers, policymakers, everybody needs to get the confidence that actually our folks are as good as anybody in the world.
Okay. So that's what you're hoping.
Yeah, because we invest globally as well.
And how crucial is the outcome of elections in 2024 in keeping the investment climate
I think
going
what,
for us?
what the market likes, what investors like, is a certain level of predictability. So, in terms of the elections, so if the government stays the same, then there would be an expectation that the same policies will continue.
Sure.
Yeah. If the government changes,
Then there's a...
then you'll have to wait and see what happens. So, at the moment, from what I see in the ecosystem, is there's a belief that actually nothing is going to change,
Okay.
that there will be continuity. So I don't see any startups, any investors holding back
Okay.
because of what might happen in April. They're doing what they do. The second part also is a bit like the IT service industry. You know, when you have something good, doesn't matter which government comes, they would be foolish to try and change it.
Right.
Right? So if you look at the startup ecosystem, yes, it is very true that it is this government which put the lens on it, focus on it,
Sure.
did a lot of things, fund of funds,
Right.
opening
Startup
up
India.
the startup, and lots of great things.
Right.
And we've seen the result. I mean, it took us what? Over 3 decades for the IT service industry to be worth about 400 billion. I think if we look at all our startups, they must be close to that already.
Already, in less than a decade.
In less than in a decade, right? So, which government would want to change that?
Sure.
So I think there's confidence amongst people that for us it would be fine. The stock market is a slightly different issue. See,
Right.
because here when you invest, so now you will reap after 7-8 years.
Right.
Very different from the stock market.
Sure. Yes, which is
So you have a
immediate.
longer term vision.
All
And
right.
therefore, I don't think investor startups are that focused on it. I don't think they expect any change,
Uh-huh.
but they're not overly concerned
Okay.
because they don't think
So they're expecting continuity.
they're expecting continuity.
All right. Thank you so much, Dr. Srivastava, for a very candid and a very insightful chat. We wish you great health and lots of investments in 2024. Thank you.
Okay, thank you.